trading for an income. My mortgage was $1,000 a month. And if you do the math on that, with one lot, all I needed was 5 pips out of a 24-hour day, 5 pips a day at $10 a pip, and I no longer have to pay for my home in Staten Island. Somebody on the other side of the computer will be paying for my house for me. When that hit me, it hit me like a ton of bricks, because I was chasing the right idea. I wanted to make money, but I was going at it the wrong way. And what I really wanted initially was to replace my income as a construction worker. But I got caught up in trying to be a millionaire overnight, and lost a lot of money. Also, I was taught by people that I guess meant well, but actually didn't know either. They didn't know what they were doing, or they didn't know how to teach, one of the two. And I began to go into the woodshed, as we old folks say, and started to teach myself and study and read a few books here, look at some stuff on the internet there. And I finally got my feet underneath me, and knock wood, I got back every penny that I lost and then some. During my journey, I would often have these guys talk about how great they were doing and all this. And I said, well, look, let me look over your shoulder, see what you're doing. Every time I had that opportunity, they would turn their shoulder so I really couldn't see what they were doing. And that kind of ticked me off a little bit, because they said they promised, number one. And number two, I had motivation. I had a family to feed. You know, I had things I had to do. So I then went on a mission to myself. I said, if I ever get this thing to the point where I am consistent, if anybody ever in their life wanted to look over the shoulder of somebody and see what they were doing, I'd be more than happy to have them look over my shoulder. In the process of that, I've learned that you should never stop learning. Now, I was doing okay when I saw that ad that Oran put out, and I always took 10 to 20% of whatever I earned and put it back into education. So if I had a good week, I'd buy a couple of those $30, $40 books. You know what I'm saying? Or I'd pay for someone's $159 course, a $300 course, because you got to keep learning. You got to keep up to date with what's going on. So when I saw Oran's post, I said, okay, let me check this guy out. And Oran and I hit it off really well. We were kind of cut from the same cloth in a lot of ways. Our styles and methods were different, but our goals and how we looked at trading was generally the same. So I did a lot of teaching with his group, and shared a lot of information, a lot of data, a lot of, indicators, trading strategies, did some live trading and all that. And as life would have it, we both got busy and kind of lost connection. So it's good to reconnect with him tonight. And I want to thank him for allowing me to share some information with you guys. Oran?
Can you hear me? Can you hear me? Can you hear me?
Yeah, I can hear you. Yeah.
Perfect. I'm here. So yeah, guys. So I just want to tell you guys, please take notes. All right, you've heard from a lot of people in the industry, and I've been telling you guys, I'm going to get someone who I looked up to, and there's not a lot of people I look up to. I'm going to get him on here, and now here it is. This is your chance. Take notes, pen and paper ready. Make sure all background noises are turned off, all distractions are eliminated, because what Mr. Lewis Cooper is going to show you tonight, not only is it going to blow your mind, but it's going to change the way you look at the market. All right, guys, so just open up your minds and just let's get ready. All right, Lewis, it's all yours. Let's go.
Okay, so there's two things I want to talk about. One is the 3 Ps of trading. And I'll show you a very simple trading system that kind of talks about that. And I want to talk about a spreadsheet I created to help me trade for income. Okay, instead of constantly chasing, giant moves or whatever. Now, the 3 Ps in trading, and I'm going to put them in the order that I personally believe they belong in. The first one is patience. First and foremost, patience. You have to wait for the market to come to you. Okay? Second one is persistence. Once you have a trading setup, once you have an idea what it is that you want to do with the charts, you have to persist and do that and that only until you've collected enough data to say that it's wrong. Okay? And the third is practice. When the markets are closed, your best friend on your MT4 trading platform is that F12 key on your keyboard. All right? And I'll show you what I mean by that. Okay? So patience, persistence, and practice. Those are the 3 P's of trading. And that's the order that they really have to come in. You got to be patient with yourself because you're literally learning a new language. Okay? Everybody in here has a job and they work for a company, and that company has its own built-in language. Where if someone from the outside came in and sat and heard you on the phone, they'd hear you talking about all kinds of, stuff that may sound like nonsense to them, but because they don't know that in your company, that's the code word you use for this or that. You follow what I'm saying? So if you're driving a forklift in a factory, and let's say all the pallets of rice come in together, and the pallets are always categorized as X5 pallets, and your boss says, give me 2 pallets of X5. Now, to an outsider, you don't know what the hell that means. But because that's an inside thing with that company, the guy in the company knows, oh, yeah, he needs 5 pallets of rice. So please understand that you're learning a new language. When you learn something new, be absolutely sure you know the definition of any of the words you learn. That is crucial. Don't assume oh yeah, I know what support and resistance is. Yeah. What is it? And then you're damn near always wrong. You know what I'm saying? Or yeah, well, I know what RSI is. Yeah, okay, well, explain it to me. And so many times they're wrong because they just don't know. Okay? So practice, patience, persistence. I'm sorry, patience, um, patience, persistence, and practice. All right? It's actually in alphabetical order. Patience, persistence, and practice. So I'm going to show you something very, very simple, okay? And this was a money maker for an elderly woman. And she was in, I believe it was Stocks and Commodities magazine many, many years ago. And I'll just show it to you. Now, just let me figure out the share screen thingy here, okay? If the screen goes dark and I screw up, Oran will tell you, like, I'm good at certain things. Sometimes this technology thing kicks me in the butt. Can anybody see my chart right now? And Oran, can you unmute them so I could get questions?
Perfect. Yep, we can see your charts.
Okay. Can you unmute them so I can take questions?
All right. I'll unmute them and I'll mind the questions. Yeah, everybody can see it. Perfect.
So what are they going to? They'll type the question and then you'll read it to me?
And I'll read it to you because if I unmute them, most of them still have background noise. It's just going to mess up the webinar.
All right, no problem. So guys, if you have any questions, type them in, and then what's my man eating? Those are chocolate chip cookies? Was that okay? They straight though, right? They don't have none of CBD in them or nothing, right? All right, okay, as long as we're good. I just got my medical marijuana card. Not that I need it, but I had an opportunity to get one. So I said, why not? So patience, persistence, and practice. So this was the system that an elderly lady used with her firm, and I don't know how she developed it or whatever, but it's amazingly simple and highly profitable. This is a 34 moving average. Does everyone know what a moving average is? What does a 34 moving average mean? If someone could type an answer in. If I say I have an 8 moving average, what does that mean?
Okay. We got some people saying yes, yes, yes. 8 candles, simple or exponential. Price for the last period.
Okay, no, that's not what a moving average is. Somebody else?
Okay. It's a
Don't be waving your finger at me, bro.
someone
Mr.
says it's
Dolphin.
dynamic support and resistance.
It's what?
It's a dynamic support and resistance.
Absolutely fucking not. But thank you for the answer. Oh, by the way, I speak the King's English sometimes because sometimes you got to get a point across the way you got to get it across because this is money you're talking about.
All right. Another person, AJ said it's the average closing price over the last period.
No,
Average price from the last 34 days.
much, much better. Whoever said that, much, much better.
Roger said that.
Okay, Roger. So basically, what a moving average is if your mom sent you to the store and said, you know, get me like a cantaloupe or something, and you said, well, what size? And she said something in the middle, meaning not too small, not too big. So she would want you to get an average size cantaloupe. You got me? So what a moving average is that they take the price. Let's take an 8 moving average. They take the price of the last 8 closing. They take the data of the last 8 closes. Okay, where did the last 8 candles close? And they add that number up, and then they divide that number by 8. And that tells you what the average price of the last 8 candles were. You follow me on that? So if I had a 50 moving average, and if I had a 50 moving average set to the closing price, it would take the last 50 closing prices, add them all up, and then they would divide that by 50. And then that would give you the average price over the last 50 candles. Everybody follow me with that?
All right. Elizabeth wants you to repeat that one more time. I think she got it, but she's writing it down at the same time.
All right. How a moving average works is that, and I'm going to use an 8 moving average for an example. They'll take the last 8 closing prices for each candle, because each candle is going to close at a different price. We all agree on that, right? Because some candles go up or down, but 8 candles are going to close at 8 different prices. They take that number, they add up those 8 prices, they divide that number by 8, which is the number of candles they had. And when you divide it by 8, that gives you the average price of the last 8 candles.
Got it.
Okay. So this woman wasn't a sophisticated trader at all, but she just wanted to make a little bit of profit. That was the goal. Let me make a little bit of profit and I'll get out the way. Just a little bit of profit, I'll get out the way. That's all she wanted. So now listen to the rules of this very carefully. Okay. I'm not saying use this as a trading system because I don't know what your patience is like, what your risk tolerance is. But I want to show you that trading can be very, very simple as long as you know what it is you're trying to accomplish and you're willing to be patient and wait for your setup. Okay. And you're willing to be persistent and only trade that setup. And you're willing to practice when the market is closed so you can get a lot of looks at that same setup. All right. Any questions so far?
Yeah, we do got one question.
Yes.
Chaz said he got a question. Let me go ahead and unmute Chaz real quick so he can ask his question.
Go ahead.
Go right ahead, Chaz.
Okay, I can't hear him yet.
Chaz, you're unmuted. Go ahead. Going once, going twice, you're back on mute.
Well, he could type the question.
All right, guys, type the question. Guys, remember this. If you have a question and I unmute you, speak it or type the question in, because we don't want to hold up this information right here. Okay.
All right. It looks like everybody's using the camera on their laptops. Dolphin just turned his camera off. It looks like all the cameras went off.
All right. Let me.
There's a little bit of hair left. Yo, I really miss my hair now.
Is that people?
See what happened when I unmute everyone? Oh, so many side conversations going on. But go ahead, Chaz, unmute yourself. Chaz, there you go. Unmute yourself. All right, you can't. Emmanuel, you got a question. Go ahead, unmute yourself.
Yeah, please, can Luis just type in the moving average definition again?
Can
he keeps changing the definition every time, trying to explain for clarity. And like I asked earlier, is that the same definition for simple or exponential?
Okay, so basically you're asking this, the definition that he gave for moving average, is it the same for simple moving average as it is for exponential?
Yeah.
Okay.
And if you could just type.
Type it?
Yep.
No, typing it is a lot to ask for right now. Write down the information that he's giving out to you right now. So Louis, he would like to know, is the moving average, the simple moving average, does it have the same definition as the exponential moving average? Louis?
I think he's muted.
Oh, snap. Oh, my fault. Oops. Yeah, I muted out. Let me Oops. My bad, Louis. I'm coming back. All right,
So,
Louis, there you go. No,
all right.
I had you muted, Louis.
All right. So a simple moving average means they're doing the simplest math possible. And if you have the moving average set to close, it will take the last 8 closing prices, add up all of the prices, they'll come up with a big number, and then they divide that number by 8, since you're doing an 8 moving average. With an exponential moving average, they do something similar, but they put more attention, they change the math a little bit for the first 3 or 4 candles. You follow me? Because with an exponential moving average, you want to pay a little more attention to the ones closer. Even though it's an 8 moving average, they'll give some calculation to the last 5, but a little different calculation to the last 3. You got me?
Yeah.
Okay, so they do the math a little bit differently with an exponential because they want the exponential to follow price a bit closer. And I'll show you on the chart here.
So invariably, your definition is actually applicable to.
Yes, for right now, yeah. Because
right,
you don't really need to complicate things at this point.
Okay, sorry. Thank you.
Not a problem.
And I think you're going to answer that same question right now, Louis, with this person here. Greg Briett says, how do we use the moving average to our advantage when trading? And I believe you're probably going to answer that question when you're showing the moving average now.
Yeah. Okay, so how do you use that to your advantage? Well, one, you could use it as a trend indicator. So in this case, you'll notice when the candles start to close below this 34 moving average, they tend to stay below it for a while. When the candles close above the 34 moving average, they tend to stay above it for a while. All right? Someone give me a number between 1 and 10, because I want to roll back on the chart a little bit. Someone just give a number to Oran.
7.
7. Okay, so 1, 2, 3, 4, 5, 6, 7. So again, you see that the moving average is in a downward slope right now. All right, so if the moving average is in a downward slope, that means prices generally are continuing to close lower and lower and lower. Okay? And if I wanted to put a straight line through that, if I put a straight line, you'll see that pretty much prices are moving down. So when this moving average is in a downward slope, you want to look for red candles to make your entries. Same thing here. You see that? That moving average is in a downward slope. And now we see the moving averages is an upward slope. Now you want to look for green candles for your entry. That's one way of using it, okay, as a trend indicator. Another way of using it, and this is kind of off the topic I wanted to talk about, but another way of using it would be like a dynamic form of support and resistance, okay?
Then that answer my question.
What's that?
Then that makes my answer right.
What do you mean?
When you ask what we understand by moving averages.
No, I asked you what was a moving average, not how to use it.
Okay, it's all right.
Two totally different questions.
Okay.
All right. If I ask you what a hammer is, that's different than asking how do you use a hammer.
How it is used. Okay.
Got it?
Yeah.
Okay. Because a lot of people make that mistake and they think that's all it is, and it's much, much more than that. But let me show you the system that this lady used. We did 7. So I'm going to go back here. All right. So she had the 34 moving average. Now listen carefully to what I'm going to say, because this is what she did and made a ton of money at it. All right. So I'm going to start over here. What she did was when a candle closed above, all right, she would wait until one more candle closed above the 34, and that candle, no part of that candle touched the 34 moving average. Do you understand that so far? She would wait for a candle to cross the 34. Now she's looking for a signal. Her signal will be any candle that closes and no part of the candle came back to touch the 34. The candle wick didn't touch it. The body of the candle didn't touch it. You with me?
Someone asked why the 34.
This is what she used.
Okay, perfect.
Okay. And that's a very good question, by the way, because there are other ways of using the moving average with trend lines and all that. I won't get into all that, but that's a different beast altogether. This is what she used. I don't know if she got it from her husband. I don't know where she got it, but this is what she used. And this is good because it's got a lot of fouled up stuff on it. So now we take this. This candle closed above the 34. The following candle, no part of that candle touched the 34. She would enter on the next candle. Okay? She would enter on the next candle right here. Because remember, this is the opening price right here. All right? And as soon as a candle closed with profit, she was out. That was it. That's all she waited for. Now, that seems way too simple. Oh, it can't work, can't work. She made millions of dollars with this. So much money that the experts that were her brokers, because she didn't want to deal with a broker, believe it or not. She needed a brokerage house to place the trades, but she didn't want to talk to any of the people there because she didn't trust a lot of them. But she needed a broker. So the brokers watch, how is this, who is this person making all this money? They finally convinced her to come into the office. First, they were shocked it was a woman, okay, because they weren't ready for that. And then they were shocked at how simple it was. And then the experts, the guys with all the degrees and all the papers hanging on the wall, thought they could tweak it and make it better, started losing their own money trying to tweak it. Okay? Now, she didn't win every trade, but she almost never missed a big trade. Did you follow me on that?
Someone asked, is it recommended to use the 1 hour time frame?
Well, she was using the 4 hour and daily. I just went to a 1 hour because sometimes I use it down there based on my trading routine. Once you know your trading routine, then you'll know the best time frame for you. And we've discussed this before in other ways. Like if you've got a day job, you can only look at the charts at night. Well, then you might want to be a 4 hour and daily chart trader. If you've got time to sit 3 or 4 hours a day at the computer, you might want to be a 5, 15, half-hour trader. You know what I mean?
Okay.
So
And,
once you
about-
understand your trading style, then that's what you would do.
Okay. And Chad Santana, his question was, where 70% of volume, where the price is at, go in hand with the moving average, you're saying to use another confirmation for support and resistance level.
Repeat that again.
All right. So he's basically saying where 70% of volume, where the price is at, it goes hand in hand with the moving average. So basically asking, do we use another confirmation for support and resistance?
On this system, this is all she used. You are like the people at the brokerage house. You're tweaking it, adding a whole bunch of shit to it that she had no concept of any of that. All she wanted to do was just make some money. And she felt that was the easiest way to do it. And it paid out magnificently for her. Okay? So now the other thing is that statement makes the assumption that 70% of the volume is at the price where a candle is. Is that what you're saying? That's kind of a dangerous assumption.
Okay, let's find out. Ches, is that what you're asking? Is basically 70% of the volume. So I'm going to go ahead and unmute you. You guys know when you ask those questions, you got to come correct with Lewis. Go ahead, Ches, you're unmuted. Going once, going twice. You need a new computer, Chaz. What's going on? All right, that's what he's asking. All right.
All right. So look, this is the volume indicator. And what you'll notice in the volume indicator, it looks like a sawtooth. All right. You look here at this particular time of day, all the volume decreased. Then at this particular time of day, all the volume increased. All right. But then look carefully to what this is. These 3 candles, the volume dropped dramatically. But if I put the crosshair under these 3 candles, price was going up. So how is price going to go up on falling volume? So be very careful about that assumption that 70% of the volume is at a given price.
Wow.
All right. Do you follow that? I don't want to get too far off and get into that whole conversation, but you know, when you throw a number out there like that, that can lead you astray. You with me?
You say you got it.
Okay. The other way that this system would work would be you would follow the downward trend of this moving average. Prices are continually moving down. And whenever you get a close below that moving average, you'd want to take the next candle, and she would close on the close of the next red candle. And so in this case, price closed above the moving average. She would enter here and exit the trade on the close of that candle if she was in profit. Period. It's so simple, it's frightening. This candle closed above. She would enter this candle here, and she closed it at the close of this candle because she was in profit. Okay, only 22 ticks, but you know what? That was money in her pocket. And she was very persistent. That's all she traded. She didn't get fancy with it, didn't overcomplicate it. Now, she didn't make a lot of money on this trade, let's say, with this candle closed above it. And the next one, it closed in profit. But she didn't lose anything either. This candle closed below, and then she made that little bit of profit. Again, another 23.
And the question is, how many trades per day was this trader taking?
She was doing 4-hour and daily charts. So the better question would have been how many trades per week. And I can't give you that number because I read the article a couple of years ago. But it was more on a daily chart, you may only get 2 or 3 trades a week. You know what I'm saying? And I'll go to a daily chart. You'll understand what I mean, because sometimes people, when they day trade, they get a misjudged sense of time. So this is her rule here. This candle closed above. I enter on the next candle, and I close the candle when the candle's in profit. And there it's what, 22 and a half or whatever it is. You see that? So now look how many days she had to wait for her next trade. All right. She waited a month for the next trade. That's 30 candles away. You see that? So it's more, and she was trading stocks, by the way. Let me preface that. So with stocks, she could have had 3 or 4 trades a week because she'd jump around from stock to stock to stock. But she was persistent. She didn't trade anything else except that. So my point in showing you this is to show you that it doesn't have to be a complicated process. We sometimes tend to get so wrapped up in how fucking smart we think we are, we actually make ourselves stupid and then not able to make money. All right? Because this is about making money, not about being right. I have another friend who does very well. I haven't talked to him in a long time. But he had one, I believe he was using the 50 moving average, and he would take a trade on the 50, and I'm trying to remember the rules, but he would lose probably 70% of his trades, but he would make an ass load of money. Excuse me, ladies, for saying it that way, but he would just make an ass load of money. And what he would do is, like, this candle closed above, his stop loss went right there at below that candle. And then he would ride for like 100 pips with that little stop loss. You see that? So this candle closed above the 50. He entered at the open of the next candle. His stop loss was right below the candle he entered. And he would go for like 100 pips, and his stop would only be 4, 5, 8, 10, whatever that candle was. And he would get hit a lot of times, but he almost never missed a 100 pip move. I personally, in my mind and how I'm made up, I can't stomach losing 6, 7, 8 trades in a row. He could do it like it was nothing, like it was drinking a cup of tea. But that's his mental mindset around trading, and it works beautifully for him. Okay? His risk tolerance allows him to do that. And we also did that trader psychology test, Oran, remember that? Where we had everybody fill out the 25 question questionnaire.
Yes, sir. And I fell right on my face with that, man.
Okay, because you got to know who you are, because you can only trade who you are. All right. So I just showed you 2 simple things that people were doing, making a lot of money. They're not complicated. I'm not saying they will work for you, because sometimes there are losses involved. And with this other thing, with the 50 moving average, he was willing to take loss after loss after loss because he knew he'd never missed a 100 pip trade. You get what I'm saying? Because he was always, in the market for it. So again, my psychology doesn't allow me to sit through that many losses without wanting to go choke a cat or something. So keep it simple. All right. Keep your trading simple, be patient, and practice. I want to talk about the F12 key. Okay. Let me go back to the 1 hour chart. Let me get rid of these volumes. You understand what I was showing you about the volumes, by the way. Be careful about what you think about volume, because falling volume means that there are less people in the market. And if there are less people in the market, that means more people on the other side are about to come in. And I'll just show you, I'm going to go off the reservation again. Oran knows I do this sometimes. When you see falling prices and yet the candles are going higher, get ready for the other side to take over, because there's less buying volume. Less buying volume. And that means selling volume is going to jump in the market here pretty soon. And that's what that spike was. The sellers jumped on board. That's real important to understand how these things work. All right. And, maybe another time we'll do something on volumes for those people that like to trade volumes. I don't look at them that much, but I wanted to know what they were and what they represented and how to read them. So I took a week and just, went to the woodshed and studied it. delete. So on everybody's keyboard up at the top, there should be your function keys, the F1, F2, F5, F8. And the most important one for MetaTrader is F12. Because if you hit F12, the chart moves forward one candle at a time. All right, that's real important when the markets are down, and then when it's like Sunday or Saturday night, or even if it's in the middle of the day and you got an idea about a system, you want to test it a little bit, throw your indicators on, hit F12, one candle at a time, okay? And then when you start to see your setup, let me put the volume back in here again, because this will give you an idea. Indicators, because we're on volume, sorry, may as well just, I got to go with the flow. All right, so you see here, we've got falling volume, but all these candles are going up. So what does that tell you? That, yeah, they're buying, but there are fewer buyers. That's an indication that this is likely to make a bit of a pullback at some point. All right, you follow what I'm saying? So I hit F12 again. And look, we got a doji, indecision candle. Hit F12 again. And now we finally get that red candle because buyers, the sellers are starting to come into market now. Hit F12 again, and you see we had a couple of sellers there. F12 again, F12, and you see how it goes one candle at a time? And lo and behold, from this area where the decreasing buying volume is an indicator that increasing selling volume may be on the way. So that was a very good example, just using F12. I don't even know what pair this is. What is this? Dollar yen. Okay. So that would be a simple way if you really want to get a beat on volume, but you know, to get an idea how to use it. All right. So, and by hitting F12, you can go one candle at a time. And look at that. I mean, we knew what was happening right in here. 3 or 4 candles going higher, and yet the volume was decreasing. Volume dramatically decreased on that candle. Boom, indecision candle, doji. And lo and behold, as the sellers came in, we had increasing selling volume. All right, any questions? I didn't mean to get into this, but I trust, I call God the architect. And sometimes the architect directs me to say certain things. I just follow it.
Well, we just got some aha moments.
All right.
Aha moments, some mind-blowing moments, because that little nugget right there you just showed them, you know, just moving it, because right now everyone uses TradingView to replay the market because it's fast and simple. But now that you're showing them that you can actually replay the market one candle at a time on the actual platform that we trade on with volume, so that's good.
Absolutely.
Right there. Everyone's saying that's good information. They had no clue about volume, and the information you just shared right now was golden nuggets.
All right. So, well, thank you for that. And I'll end it there. I'll end that part of it there. But keep it simple. Understand what your indicators are telling you. And I won't get into volume at the moment, but understand why did they create the volume indicator? What were they trying to figure out? And once you understand what the originator, and it was Bill Williams, by the way, once you understand what the originator of the indicator was looking for, it'll give you an idea of how it was structured. Why did they use that certain math? Okay, let's get rid of this. So now I want to talk about the spreadsheet. Now, I don't know which ones you guys have. I have a bunch of them that are the same, but I've been constantly making improvements. So
we don't have anything that, you know, just whatever you have, Louis, whatever you have. You got the floor.
All right.
Because everyone here is basically brand new.
Oh, okay. So All right. So this spreadsheet, I wonder if I have the original one here. Let me do a quick computer search for something.
All right, while you're doing that computer search, guys, I'm gonna tell you, make sure you take some notes because with this system right here, Lord's gonna show you how he made all of his money. And trust me when I tell you, it's mind blowing. You know, having a trading plan, this is your trading plan. This is what made me decide, hey, listen, I need to pay my bills this way. So when you guys hear me talk about this all the time, about paying your bills, this is where I got it from. This is where I got it. You got to pay those bills first, and this is how I did it.
Now, keep in mind, let's say you wanted to lease a Mercedes. A Mercedes, to lease a Mercedes, depending on how much you put down, let's just say for argument's sake, it's $500 a month. Would that be fair? Or put it to you this way, could you lease a decent car for $500 a month?
Yeah, you can get a Kia.
Well, I don't know about, well, okay, we all have our different ideas of what a decent car is, but because I'm kind of a big guy in a Kia, I don't fit in the Kia, make a long story short. I'm still trying to get rid of my fat bastard ways. But I'm good. I lost quite a bit of weight. So let's say the car you want to lease is $500 a month. Okay? On a daily basis, how many pips would you need to make in a single day and then do it every day in order to get that $500? Who's going to come up with the answer?
Someone says 10, 50. We got 10 and 50 so far. 10 pips with a standard lot size.
Wrong answer.
Ooh. I think everyone else is afraid. We got 100 pips.
Don't be afraid.
500 pips at a .10. And someone says, someone just went the easy way.
Well, I said, what do you need to make every day? If you trade and make a little bit every day and it adds up to 500 at the end of the month, how much do you need? How many pips do you need to make every day for 30 days?
5 pips, 25 pips. We got 25 pips.
Okay, I'm going to give you the answer. You need 2.5 pips a day. If you make 2.5 pips a day, you put $500 that month in your pocket. That will make you look at all of this stuff a lot differently. Do you follow me? And I remember, because I said earlier, I gave you a clue earlier, my mortgage was $1,000 a month. And at 5 pips a day, I make $1,000 a month. 5 pips. How many pips a day does the pound yen move? Anybody know? And not you, Oran.
Oh, man.
I'm just curious.
Someone said 160 pips, 100 pips.
Pound
yen, 160 to 100 pips.
All right. Whoever said 160 is close to the ballpark. It usually moves around 150 to 150 to as many as 200 a day. So if the pound yen moves 150 pips a day, and all I need is 2.5 pips out of that 150, if I get that 2.5 pips every day, I can pay for a $500 a month lease. Does that make sense? So what I began looking at was, how can I structure my trading to make sure I get that little bite every day? And what would happen if I just kept doing it? Okay. I'm going to open up a couple of things here. I'm looking for one of my old spreadsheets. No, that's not it. No, that's not it. Boy, there's a lot of experimentation. um, compounding rules. This was the 217 one. Okay, I'll start with this one. Okay, this is one of the old ones. All right. And the thinking here is that I'm going to change this to 10 pips a day. Does everybody in here feel confident that they can make 10 pips a day? Margin per contract is 500. This was set up at 1,000 to 1 leverage. I'm going to set it to 200 to 1 leverage.
They said yes, they can. They feel confident that they can make 10 pips.
Okay. So this is set up. I'm a monthly withdrawal. Ignore that for now. Max contracts, ignore that. Margin per contract at 200 to 1. If you're trading a pair that pays $10 a pip, like dollar yen or something, your margins are going to be $500. They're going to want you to put up $500 to place that trade. Does everyone understand margin? If you don't, I won't get into it now because it could get a bit lengthy, but just really quickly, the brokerage is going to ask you to put some money aside to place that trade. So if you want to take a one lot trade on dollar yen, the broker says, okay, well, give us $500 to hold just in case shit goes south. You got me? That's what your margin is, put it in plain English. And I got to say it that way because it's easier for people to understand that. So what happens is when you put up that $500, the broker is going to hold that. If something goes wrong and you're not at the computer, or if there's a power failure and that trade goes all the way dead against you and kills your whole account, it'll take everything except that $500. That's like a safety net. So then when you finally get back to your computer, yeah, your account may be blown, but you got that $500 left because that's what the broker took as margin. All right? There's a little more stuff to it than that, but that's a very easy way to explain it for the time being. Okay? So tick dollar value means every time I make one tick, I make $10. And I'm trading at 200 to 1 leverage. At 200 to 1 leverage, my margin is $500. Everybody with me on that? So, and I'm going to change this to, I'll make this 10%. Keep these numbers kind of simple. All right? Now, let's say you start out with $500 and you're going to trade 0.1. You got me? 0.1. You're trading a tenth of a lot. So the margin you're going to use is going to be 1/10 of the $500. You're going to be using $50 margin. And if you make your 10 pips, you make $10 profit. You see that? You're going to trade a 0.1. And if you make your 10 pip trade, you make $10 because it's, basically $1 a tick. Everybody have any questions on that before I move on?
Nope. I think they're clear on that one.
All right, good. So now let's say you do that every day. You make your 10 pips every day religiously. Every day I make my 10 pips, I make my 10 pips, I make my 10 pips, and I turn the computer off. I go walk the dog or something. At the end of a calendar year, that $500, you see it says daily starting balance. At the end of the calendar year, that $500 turns into $86,102. Okay, and what are you risking? $50 out of 500. And you're doing 10 ticks a day, 10 pips a day, $1 a pip. Now, this is where I mentioned the 3 P's of trading. This is where the patience comes in. It will take an enormous amount of patience and dedication to your goal to do 10 pips a day and walk the fuck away. because human nature is going to make you get greedy. You're going to sit down one day, make your 10 pips on your first trade, and you're like, damn, I got the rest of the day left. I'm going for 10 more. And I guarantee you, when that little devil on your left shoulder starts talking, your money's going to come flying out of your pocket. Okay? This is where the persistence comes in the 3 Ps of trading. Okay? I want to be persistent. I want to make my 10 pips every day and then turn it off. Be persistent. 10 pips, turn it off. 10 pips, turn it off. Now, you can have more than one account if you just want to keep trading, but you need to have one account. Well, let me take that back. I would suggest you have one account that's your account that you're going to grow, and you don't mess with that account. You do your 10 pips, you walk away. You got me? Then if you want to gamble and start going for them long shot trades and all this other stuff, that's cool, because there's a lot of money to be made there. But you got to have one account that's going to be, this is going to be my steady, everyday growth account. Okay? So that's where patience. Let the account build. All right? Persistence. Only grab your 10 pips and then practice. At the end of the day, go over, look at what you did. Use that F12 button. Go one candle at a time. Check your setup. See if there's a new setup you could develop and all that. Okay? So your $500 turns into $86,000. So as I roll down, now this is trade number 1 or day number 1. And you see here, you made your 10 bucks. And then over here in your starting balance, you start the next day with 510. And remember, you're only trading 10% margin of what's in this column. Whatever is in this first column, you only always trade 10% of that. So it would be very difficult to blow the account. And then you look at the size, your lot size doesn't go up until your margin, until your account goes up enough that you could trade an extra lot. Because now you're trading 10% of this number of 530. Do you follow that? So now let's go down to trade, I don't know, let's go down to trade 50. So now you're at trade 50. All right? And you're still only trading 10% of what's in this column. But that 10% now allows you to trade 0.26. You got me? And if you take your 0.26, you take your 10 pips, just 10, you make 26 bucks for the day. Doesn't sound like a whole lot of money, but remember, you're looking to build Christmas money.
Excuse me, Louis. I don't mean to cut you off. This is powerful. I just want to share something with everyone real quick.
Okay.
Guys, you see at trade number 50, your account is up $1,319. Still trading 10%. Look at the lot size that he's using, a 0.26. Many of you on here, Louis, I'm telling you, a lot of them on here at $1,300 would have been trading 2 standard lots already.
Oh, well, okay. I mean, a little dangerous, but and that depends on the system. I'm not saying that they're wrong, but I'm just saying, look at trading as if it was a store. Okay? If you owned a shoe store, what would be on the shelves in your store? Shoes. But when you're day trading, what is the product you're selling out here in the market? It's money. You're trading the dollar against the yen, the pound against the Aussie. And so the stuff that's on the shelves of your store is money. If you run out of product, guess what? You can't become a customer, and no one can become a customer of yours. Your store is closed. For those of you that follow boxing, what is the #1 rule in boxing? The #1 rule they tell you before you even put the gloves on, the #1 rule in boxing is to protect yourself at all times. The #1 rule in trading is to protect your account at all times. All right? Protect your account at all times. So now get this. So, and let's assume now that we're doing a 10 pip take profit with a 10 pip stop. I just want to put that in there for the moment. 10 pip take profit, 10 pip stop, okay? So if I take this trade number 50 that Oran pointed out, if I lost that trade out of $1,319, if I lost that trade, I'd only lose 26 bucks. I got plenty left to come back the next day. You feel me on that? So that's how this is designed to work. Then when you scroll down and you look over here in this column, on the far right, it says in month number 3, for that month, you've made in total $536 for the month. You see that? And in week 1, you earned $126, and that was this $26.39, $26.92, $27.45, $28. You add those up, that 5 days comes out to that $126. You understand what I'm saying? And then week 10, week 11, week 12, you add all that up, and for that month, you've made your $536. So in 50 trading days, where was that 50 at? I missed it somewhere. Okay, let's go to 60 because it's right here. So in 60 trading days, you have now accomplished the money you need to pay for your lease for your car. And you could stop right there. And you could just do that and do nothing else but that every day. Take your 10 pips, make your 32 bucks a day, turn the computer off, walk away. You're only trading a 0.32. Yet, somebody else is paying for that Lexus. Somebody else is paying for that Kia. Whew. Not you. But this goes back to the 3 Ps: patience, persistence, and practice. So let's go to day 120. Let's just double that. It's about 120 days is what, 4 months, right? Let's go down to day 120. So now check this out. Now you're finally up to 1 lot. But look where you grew the account. That 500 is now 5,000. You see that? And you're still only risking 10%. But now look at what you're making a month. After 6 months of doing this, you're now making $1,000 a month. You could stop right here and say, you know what? I'm just going to I'm going to do my 1.06. I'm just going to trade 1.06 all day, every day, and that's all I'm ever going to do. And you got $1,000 a month, $1,700. Okay? $1,700 extra a month, and you ain't busting your ass. You're looking for 10 pips a day, just 10. But it requires patience and persistence. Anybody have any questions so far?
All right, so far we're just saying powerful, the power of compounding. What stop loss do you use?
In this example, I always make my stop loss and my take profit 1-to-1. And I'm going to show you something that's even powerful than that too. But everyone gets the basic concept. So this is what compounding is when your account grows, but you don't risk more of your account. You start out risking 10%, you keep risking 10% and 10% only. The thing is when this number gets bigger, that 10% still doesn't hurt you, because if you lost that trade, okay, you got $4,875, you're risking 10%, and the calculation says that means you can trade a 0.98. Okay, you're using $500 in margin, $497. But if you lost that trade, you'd lose 99 bucks out of that 4,000. That 99 bucks would not hurt you in the least bit. You get what I'm saying? and you still got plenty to come back and fight the next day.
Perfect. Jekyll or Jekyll wants to know, if I miss the 10 pips, do I place another trade the same day?
Only if you have a setup that you know is reliable. Okay? If you have a setup that you know 70% of the time I'm going to hit this bad boy, and if the first one misses, or a better example to answer a question, how many times will you place a trade? And I've done this live trading with Oran's group. I'll place a trade. I got the direction. I know I'm good. I place my trade. It starts to go down, toward my take profit. And one candle wick comes all the way back up, hits the exact number of my stop, stops me out, and then price goes all the way back down where I thought it was going. You got me? That can happen. That happens very often. But because my setup is reliable, I will take that next trade, yes. You follow me? Now, if you do that, and I forget the young lady's name, and you do win the next trade, all you've done is break even for the day. I personally would call that a win and leave it alone. Come back the next day. Or go to your other account if you want to be risky and get that energy out. You know what I'm saying? Go to that other account that you got. But have one account is the account that you do shit the right way. Again, excuse my Portuguese. I hope there's nobody Portuguese listening.
No, you're absolutely right, Louis, because the one thing I've seen, and this probably answers the question for a lot of people on here, they trying to trade and, because everyone have right now bills, they want to try to make some right now money. So they're going to try to over leverage
absolutely
bill paying account and use that same account that they pay bills with and just do some stupid trades. Like I've seen people trading a 0.50 on a $200 account. And when they blow that, they're constantly depositing more and more money, investing money into the market over and over and over.
Yeah. So now, so let me touch on that briefly. And this is something I've mentioned also with Oran's group. If you only have $1,000 to trade with, I would open an account with 100. See if you could double that 100. If you can't, and you need to re-up, well then, okay, re-up another 100. If something goes wrong, you got to re-up, you re-up another 100. By the third or fourth time you start re-upping that account, an alarm should go off in your head. You know what I'm saying? An alarm should go off in your head that, okay, I ain't getting this right. Because most people, if they get $1,000, they put the whole 1,000 in there, in 6 months it's gone. And they put another 1,000 in. And they come up with every damn excuse in the world. Oh, the brokers did this, they hunted my stop, and oh, yeah, you'd be surprised the kind of excuses we come up with other than we didn't do what we know we're supposed to do. Okay? Because trading is the one place where there's no one to blame but you, because it's your hand hits that mouse. And you can blame the cat, you can blame the dog bark when I hit the mouse, and, I got distracted, or my girl ain't this, and my man ain't that, and whatever. But you're the one that hits that mouse, nobody else. So now this is built on a perfect scenario. Okay? And understand how much a 200 to 1 leverage your broker is asking on like a dollar yen trade or something. You get me? That will tell you how much money this is going to be. It's not crucial because you're never going to trade. You're never going to risk a lot of it, if you get what I mean. Now, what's the name of this one? Lou compounding 2017 626. Let me just find this. 2007, no. Because I want to send this to you so you have something to kind of practice with. I even got 2017. Here we go. Let me open this up again. Let me just see something.
Oh man, you just put smiles on everybody's face when you said that, Lou.
Okay, I just got to find the right one though. No, that's not it. As you can see, I got a bunch of these. No. Hmm. I've experimented with this and tweaked it and made it better and made it better and made it better and made it better. Oh, this must be it right here. Yeah, I think this is the one. All right, so now let me 7/26/16/02/03. 16/02/03. Okay, so this is the one. I'm going to close this, and then I'm going to open this again. Make sure it's the right one. Okay, good. So can I drop this in the forum there somehow?
Let's see. Let's go ahead and stop sharing so you can go to the chat.
Oh, okay.
File.
Oh, wait. Okay, so stop sharing.
All right, share file in meeting. Let's see if you can share that file in here.
Where do you? I'm looking for where you type. Now, I gave you guys.
Chat. At the bottom it says chat.
Yeah. Okay. So let me hit the chat. All right. Let me see if I can drag and drop this in here.
I'm not sure if you can, but just email it to me, and I'll make sure everyone get it. I'll open up a file. But if you click more, someone said if you click more.
All right, let me just try this again. Dragging it over. See, it looks like it wants to add it. All right, let me do more. Share file. Oh, so it's where it says share file in meeting. Mine is grayed out, so I apparently can't share it.
Let me give you access then. I'm gonna make you host. All right, just made you host. Oh man, now make me host, Lewis, because now I can't mute people out.
All right, I think I just did.
All right, let me see. You just dropped the file?
No, the share file in meeting is still grayed out on my side.
All right. Go over to the part where it says at the bottom where it says participants.
Manage participants. Okay.
Yeah, find my name and go to more, and then make me co-host.
More. Make co-host.
Yeah, perfect.
Do you want Oran Wright to co-host a meeting? Yes. All right. So now let me go more. Let me go. Let me right-click on Oran. Okay, more.
No, I'm already here now. I'm already the host, but I'm just trying to figure out a way that you can drop that in here, that file. But if you can't, don't worry. Just email it to me, and I'll send it out to everybody. It allows me to share file. Share file. Weird.
Yeah, it doesn't let me. I'm sorry, everybody. This is where my superpowers come to an end. Trying to because I have so many of these platforms and they're all a bit different. Let me see what happens if I do this. No, I can't just drop it in there.
Yeah, don't worry about it. Share file and meeting. Yeah, I have it. Yeah, send it to me. I can share it right now. Yeah, send it to me.
Okay, so let me go. Let me double click Oran, but it won't let me like isolate you. You know what I mean? So I could send you a private meeting or something. A private.
No. Go to your email.
Oh.
Yeah, send it to me in your email, and I'll just send it out. I can add it over here.
Okay, hang on. Let me open up a window.
Right. And guys, while we're doing this, do you have any questions for Lewis? Today we are talking about the trading plan and ways that you can grow your account. All right. Now, most of you already on here, you already know how to trade, certain things. But Let me see. Do you have any questions? Okay, one question before it finishes. Can you repeat the settings for the 34 moving average?
It's 34 simple.
All right, 34 simple moving average.
And I'll show you a couple of things on that before we call it a night. But what came up here is financially fit.
247.
Okay, I didn't want to read it all out. I didn't know. Okay, and let me see if I can drag and drop this into. Yep.
Simple or close.
And spreadsheet. Okay, it's a spreadsheet and it's attached.
Okay, perfect.
All right, send that to you, and then you. Oh wait, the address on the file was not recognized. Oh, I didn't. Okay, I see what I did wrong. Okay, hang on. Yeah, I didn't pick your name. That would help.
All right, and the 34 MA. Yeah, he's going to cover that in the second team. What the 34 MA is used for. All right, so just go ahead and get your questions ready. Because understand, Lou's a veteran trader. He's been in this game for a long time. Yes, it is. It is. It is recorded. Perfect, perfect, perfect. Now, Louis, wasn't you a part of with FX Street?
Oh yeah, yeah. I was with FX Street. I used to be the director of education for a company, Beam FX in Manhattan, right across the street from Grand Central Station.
So for everyone that's on here, we use FX Street, or most of you use FX Street for for the news. And
yeah,
you gotta understand who we have on this live webinar right here. Okay, you gotta understand who we have on this webinar right now. We just don't have just a random Oran on here, So make sure you take some notes.
So let me go back. Now I can see everybody with what they're typing.
Yes.
So Alex is saying open or close. In the examples that I showed you, it was always the closing price. Orange is going to share what time frame do we start with, or just practice 14 and day? 1-4. I don't know what that means. That's Dolphin's question. I don't know what he meant. 14. It looks like 14, 1-4 and day. Oh, I think he's saying 1 hour, 4 hour in daily chart. So the best way I'll answer that is go by the amount of time you have to sit at the computer. Okay, like what happened was, like, I got busy during the mornings. I couldn't trade at morning, so I could basically only trade at night. So then I started doing only daily and 4 hour charts. You follow me? Because when I come back home at night, I'd only have to look at 1 or 2 candles. I look at the 7 o'clock candle because I'm home. I look at the 8 o'clock candle, look at the 9 o'clock candle. So I can look at the candle, see if my setup is there. If it ain't there, I go watch a TV show. Come back 5 minutes to 9, see if things change dramatically. So based on the amount of time I had to sit at the computer, that worked out for me very well. What's the deal with the capitals? 1 hour, the difference in movement with the volume indicator as price constitutes as divergence. Purpose-driven, the difference in movement with volume indicator and price constitutes as divergence.
Yeah, I guess they want to know if the...
You could call it that, yes. You could. It's one way of looking at it. Let me put them back up there. But now I need to know. Well, I don't want to get in too deep in definitions because we'll be here for 100 years. But yeah, you could say that.
And you can hit share on the bottom, the green little thing, the green little box.
Okay, so I don't see anything else. I'm trying to go back to old questions. Okay, I don't see any new questions, so I'm just trying to. Yeah, so you could call it divergence. So here you see candles are getting higher, and let's just walk through a couple of them. And I didn't intend for this to be part of the thing, but I always trust. You see, prices are higher, volume is lower. That means at some point, that means, again, the way I explain it so people have an understanding of how it works. If volume is lower, volume means how many people are buying these candles. How much buying, how much money is
You're not
going into
sharing.
this?
You're not sharing.
Oh, shoot. I'm sorry, guys. I'm sorry. Yeah, that would kind of help.
Yeah, I go through that all the time.
All right. You see it now?
Perfect.
Yes, I was looking at this group of candles right here. And as you can see, prices went up, but volume kept going down. Because volume, the way I explain it, and it's not technically correct, but it's an easy way to explain the concept. As volume drops, that means there are fewer people in line to buy this. Okay? With fewer buyers in the market, that means eventually some sellers are going to come into the market. All right? And then when that happens, the sellers come in, and now the selling volume stops. There's lots of people in line to sell. Do you understand that? And a real good example of something like this, like the 4-hour charts, is let me go to something like the oh no, let me go let's do pound dollar.
All right, everyone. The spreadsheet has been uploaded to the chat. It's all yours now.
Yeah, when you look at something like the pound yen, what you're going to notice is look at all these spikes. See how all the volume spikes are there? And they work in clusters. It's usually clusters of 3 or 4. There's 3. There's 3. And there's a 4. Usually when you see a cluster of 3 or 4, that's an indication that there may be a subtle change. All right, you see that? It looks like a saw, the teeth of a saw. And the same thing with decreasing volume. They work in clusters of 3 or 4. So it can give you a pretty good indication of what to expect. So one way of looking at this would be, let's say you want to use the 30. Now that we know what the 34 moving average, how it's constructed, now we can talk about how could you use it, which goes back to I think Alanier's question, or Adelaide. I think that was him who asked that. So here, as you can see, the volume decreases, and then once price starts to head back to the 34, that could be a good place for a bounce, or to start looking for a new trade in another direction. All right, so you could use it as a form of dynamic support and resistance. The fastest one for that type of thing has generally been the 7 moving average. I'll just show you that real quick. 7 moving average is almost like a trend line. If you look at that trend line with the 7. Cuts and turns in. Look at this trend line with the 7. Do you follow me? The market is flat. The 7 moving average is flat. Okay, so the 7 tends to act like a bit of a dynamic sort of trend line. But again, this is for fine tuning. If you're hyper scalping, trading 1-minute charts and all that, you know, which I used to do when I had time. I used to trade 3 or 4 hours a day, and I would hyper scalp my ass off. All right, so it's a matter of picking your poison and just being consistent with it. So let me just go back to the chat. I want to see if there are any questions before I call it a night. Let me see. There's new share, market, managed participants.
No, I got it. There's no more questions so far.
Okay, I see. I don't know how to look at the chat. All right, I'm not even going to bother myself with it at the moment.
Is the 7 EMA close? Is the 7 EMA closes?
Yeah, and I'll just show you a couple of things just so you understand how this works. Insert indicators, trend. moving average. Now I'm going to show you the seven. This is 7 simple close. Now I'm going to do a 7 simple open. Now this line is going to take the last 7 opening prices and give you that average, and watch, it's going to lay on this chart differently. You see that? Subtle difference. In one of my trading systems, I use the 5 open and the 5 close, and I wait for that cross, and that cross is usually pretty good for me, right? And if you can see, every time it crosses, it tends to be fairly decent. But you got to be patient. You got to wait. And usually when it crosses, I like to see a couple of 1 or 2 candles get below it just as confirmation. But you see, when the 2 cross, that's not bad either. But there you would need a little extra confirmation. So we did the 7 close, insert indicator. Let's do one more so you get an idea. Trend, moving average. Okay, so we have open, close. Now I'm going to do the last 7 highs. What was the high of the candle? You got me? And I'll make that magenta. And look where that one goes. That's the last 7 highs. You see that? So depending on the type of information you're looking for, that's how you would set these moving averages. And they also have, I've got all kinds of like super moving averages because I like them. Let me see just what's in here. I'm setting this up. Oh, I got to send in my light bill. Shoot. Yeah, I'm trying to set up an account because I want to trade here. Because I've had friends that put money in. This is the broker you told me to be careful of.
Yeah, stay away from that one.
I know. Well, my friends, like I said, they put a lot of money in, but they haven't had any issue.
Yeah, get rid of it right away.
Now, why is this? This is not the one I'm looking for. Huh. All right, it's not the one. Okay, let's go indicator list. Okay, so if there aren't any other questions, then I'll call it a night, and we'll try to set up something again later in the week, if that works for you, Oran. And it will be easy for me.
Let me just go ahead and unmute Purpose Driven because that was a good question.
Oh, okay. Go ahead, Purpose.
All right, Purpose. Go ahead. Purpose Driven. Go ahead. You're unmuted.
Yeah, good night. So I was just wondering what would be some of the things that you did to keep your mindset right throughout your career of trading. Did you listen to certain stuff, read certain stuff? Any tips? Oh
boy, all of the above. I'll send you something that I keep by my computer, and let me do a search on it. Hang on a sec. I'm doing a search for something. Oh, come on, computer, don't do this. I don't want that. Let me exit this. Hang on. Okay, it's about simplicity. Okay, let me do it this way. Just hang on. I'm looking for something. Oh, I typed it in the wrong place. Shit, that's why I couldn't find it. Yeah, 90% of trading is mental. It is. It absolutely is mental. So this must be the new one. Whoop. Oh, they keep shooting all the way down. Okay.
And as you're looking for that, Louis, you mind telling me that one quote that you know, about women and men want to be?
Okay. Women tend to be better traders than men. I'm going to post this. I'm going to copy and paste this into the chat. I have to stop sharing, right, in order to get to the chat?
Yeah.
Okay, so stop sharing. And then I'm going to send this to you in an email. So why didn't it go through?
Did you go to chat?
Yeah, I put it in. Let me hit enter. Ah,
Chase, Chase Pips, I'm gonna ask that question in a second, but let Lewis finish this one.
yeah, I made a little chart of this that I keep near my computer, and this has been the most helpful thing to me of all things. So go ahead, ask the question.
I know. Just finish what you were saying about women.
Okay. Yeah, here's the difference between men and women in my coaching and all that. Women have a need. Let me take this. Let me say this correctly. Women actually try to get it right. They try to get the idea right. They try to get the concept right. Men have a need to be right. Okay? Very different. Also, in the beginning when you're learning, you really have to roll up your sleeves and work. You really have to work, okay? And work doesn't mean, like a headache and, oh my God. It means you got to, if you say you're going to put in an hour a day reading, then put in the hour a day and enjoy it. If you're going to put an hour in doing F12, then do an hour every day F12. Turn off the phone, don't have any music on unless it's, motivational stuff. Don't have any distractions and actually do the hour. You get what I mean? Because most of us sometimes will tend to think, I can learn that in 10, 15 minutes. Shit, if they could do it, I could do it. Now, that's correct. If they could do it, you could do it. But are you willing to actually do the bit of work? So when I began to look at people that work, roll up their sleeves and work and adopt that to trading, I have a little motto. And in my mind, it's work like a Mexican, trade like a girl. Okay? Because the girls try to get it right. So if you're offended by that, I don't give a shit. I'll be perfectly honest with you. Don't care, because it's just the flat out truth. Sometimes the truth is just the truth.
Oh man! And one last question. So,
yeah.
All right, they got the what you sent. You sent it to a private message. The one that says, "I'm a master trader."
Yeah, I'm going to send you the Word doc now.
All right, perfect. All right, someone asked. Chase Pips said, "I'm going to let Chase Pips ask this question because I knew someone was going to ask that question." All right, Chase, you unmuted.
Good evening, sir, and thank you for your time.
Good evening, Chase.
In the vein that you worked at FX Street and you were abreast of the market, which do you think moves the market more, fundamentals or market structure?
It's always, 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 always fundamentals, fear, and greed.
Whew.
Okay? Always. When you see the market go down, drop dramatically, that's fear. Okay? Greed sometimes is what drives the market up. Okay? And it's always fundamentals, and I'll explain why. My little 2 and 3 standard lots is literally like dropping a grain of rice in the middle of the Atlantic Ocean and going out with a rowboat to find it. There are much, much bigger players out there. And what I try to do is get a bead on the direction they're going in. And I'm like a fly on a water buffalo's ass in Africa. I'll be right there to get my pips as they push the market down. I'm right with you, boss. Yeah, keep pushing it down. I'm with you. I'm taking a few too. You got me? Because it's the banks, it's the institutions, it's the governments, it's the companies that drive the Forex market. Got me? All of the retail traders in the world don't even make 10% of the movement in the Forex market. If you add all the people up like us, we don't even make 10% of everything that moves the Forex market. And I'll give you a simple example. He mentioned Kia before, a car. So let's say the Kia company is Kia is what, Japanese? Korean?
I don't know. It might be Puerto Rican. I don't know.
But okay, let's just say it's Japanese for now, okay, for argument's sake. So let's say Kia found a good deal to get the lug nuts that hold the tires on the car. They found a good deal in Wisconsin here in America. They can get them cheaper. Well, the guy in America is saying, well, hey, you know, I'll sell them to you, but I don't want none of that yen stuff. Y'all got to give me dollars. I want American dollars. I want George Washington. I don't want that guy on my money sound like a bunch of forks hit the floor. So Kia has to take the payment they want to give him, put it into the Forex market, convert it to dollars so they can pay this guy in Wisconsin for his lug nuts. You follow me? That's the type of typical thing that goes on in the Forex market. Sometimes you have huge hedge funds, huge retirement funds with different unions or whatever, and they turn their money over to money managers, and those money managers play in the currency market also.
So Chase is saying that those deals are the big candles that we see on our charts.
Oh yeah, absolutely. We're not doing that. I guarantee you, we are not doing that. That's a ton of money coming into the market. Okay, it's not us. Now, there was one guy who ended up being a bit shady. I don't want to say his name, but he used to sell a lot of stuff. He used to sell a lot of these $5,000 courses. He is a master salesman. I'll give him credit for that. But the way the whole product worked was super shaky. But he had so much buying power in the stock market that he could say, tell me what kind of candle you want to see on Netflix. And I have enough buying power, I can make that candle. You got me? Because he had that much leverage, because he trades such huge volume with the different brokerage that they'll, you know, what do you want, 10 million of Netflix? Here, take it. So you said you want a bearish engulfing? I'll be back in 15 minutes. And sure enough, there'd be a 15-minute bearish engulfing candle on Netflix or whatever. You could do that with stocks, because with stocks, there's just X amount of stocks. There's only X amount of issues of a stock, if you get what I mean. Currencies are damn near unlimited because countries don't go broke.
Woo!
Okay? They find a way, they finagle, they borrow, they Brexit, they do all kinds of shit, but they don't go broke. All right? So they'll find a way to keep that currency afloat. Might be shady. You know what I'm saying? Might not be what I want to do, but they'll do it.
Well, Louis, I want to thank you for your time. It's been amazing. Guys, I want you to just go ahead and unmute yourselves real quick.
Thank you so much. Amazing.
Thank you.
Thank you.
Thank you, Mr. Lewis.
Perfect. So,
and you know, maybe we'll get together. You know, I'll work that out with Oran. And if you guys have a specific topic, you know, you want to talk about trading systems, you want to talk about support resistance, supply and demand, or you know, whatever, I'll focus on that topic. And Oran knows how I structure things. You know, if we got a topic, I kind of lock in and stay there. So,
you know, when next time you come back, you know they want to see Batman, because I've been showing them Batman like crazy, Louis. I learned that from you.
Okay.
How to spot.
All right. So there's a couple of them. I'm not sure. Oh, I know what you're talking about.
Yeah, Batman.
Yeah, and well, I can't show the chart now, but yeah, I know exactly what you mean.
Mm-hmm.
Okay, so yeah, maybe we'll touch on that.
Okay.
All right, but canvas them and see what they want, you know, to cover.
Right.
And you know,
to see where they're struggling at in the market, guys. Let's give it up for Mr. Louis Cooper, veteran trader. Oh man, we did a lot together. We traded live together. We hosted events in Jersey.
Oh, that's right. Yeah, that's right.
We in Jersey, remember?
And I would bring my projector, my screen, and stuff. That's right.
Right. We travel, and Sean and his boy used to come by. We had a good time. So guys, thank you for tuning in tonight.
All right. I just sent you that I am a master trader.
Okay, perfect, perfect.
It'll fit in an 8x10 frame. You can hang it on your wall near your computer or whatever. But it's good to read over and over and over again until it becomes just reflex.
Definitely. And I'm gonna introduce you to my guy Jay Pips, also from New York. You know, he's a master trader out there in New York as well. You know, I don't. We were about to introduce you to Jay back when we was in. Jay, remember that other company that we did the event for at the school? Lewis is supposed to come over there that day also. So yeah, I'm definitely gonna, you know, link you two guys up in New York. So hold on one second.
And you share the Word doc when you get a chance, Oran.
There you go. Let me see. Jay, you can't unmute? It's supposed to be on mute now. There we go.
Oh, yeah, now I'm unmuted. What's up, guys? How's everybody doing?
Oh, man, all is well, brother.
Yeah, no, I saw you guys on this amazing session right now, and I wanted to at least give some more nuggets and everything. I know that my man Lewis, for first and foremost, Lewis, amazing. For myself, I've been trading for 4 years, and I actually gained a lot of knowledge, tons of knowledge on this initial session, which I don't normally do. You know what I'm saying? I don't join a session and learn much, but I actually have a whole, actually front and back of notes written down, which is the first time I've actually done that. So that was an amazing session, brother. I highly appreciate that, man.
Well, I appreciate that. And maybe you have stuff that I can take notes on, because like I said, the way I met Oran is I keep learning. You know,
yeah, we're very much students of the game. Like, just because I've been trading for a specific amount of time, I do not consider myself a guru. I do not consider myself a professional. I'm still very much a student.
Right.
I'm always trying to learn. Hence why I'm on the session, trying to accumulate as much knowledge and information from professionals like yourself and Oran.
Right. And I stopped just to be completely transparent. I stopped trading other people's money. It got to be too much of a pain in the butt.
Oh,
but
yeah, no,
knock wood.
that struggle.
I tell you, knock wood. No one ever lost a penny with me, ever.
No, I believe it.
Yeah, and I've traded a few accounts that were several $1 million in size. So it's kind of nice to hit a button with 35 standard lots. Like, I got news for you. That oh boy, that says a chill down, you spy. You know, especially when you know it's real money. But anyway, that's neither here nor there. But it got to be too much of a pain in the butt because. And I may be that way someday, but people, when they get tons and tons and tons and tons of money, they're, depending on how they got it, they can be easy to work with or the worst fucking headache in the world. Excuse me, ladies.
That's true.
Yeah. Oh, you don't know. I'm trading with a guy and make it in money.
Guys, Lou, thank you. Thank you for tuning in. Jay, we're definitely going to do something with the team. Like I said, we just do random webinars, guys. Random webinars. And just last week, we did, I think it was like a 3-hour webinar with 2 of you guys in the group. You guys been waiting for it. They just came out of, you know, they've been dropping some powerful analysis inside the group. None of you have seen their faces before, never heard their voices. And I put it together. It was a 3 hours of fire. Put it together for you. And here we go again, back to back with another one with Lewis Cooper, and guess what? I'm pretty sure that Jay Pips, I think we can put something together.
You already know. Can I borrow 15 to 20? Can I borrow 15 to 20 minutes of your time and everyone else on this initial session? Absolutely, because I was just sitting here. I felt really inspired to jump on the charts and really educate and really teach. Because Lewis, obviously, you really inspired me to do that. I love teaching, I love educating, and I love to see people win within the markets. And I always want to make sure people are duplicating the same success that us as professional traders who have the financial freedom. I want to make sure everybody also has that. So if I can steal 15 to 20 minutes, that would be dope.
Listen, this is a powerful webinar. You take the floor. Let's go.
Absolutely. All right. So I'm already set up. Let's get it. So I'm going to start sharing my screen. First and foremost, everybody, I definitely want to say I appreciate every last individual on this initial call right now, because there's about 80 people on this call, and you guys can be doing anything with your time right now on a Monday, actually Tuesday night, depending on where you are in the world. It is midnight, 12:30 p.m. or a.m. Eastern time, and you guys are educating yourselves and trying to push yourselves to become better traders within the market. So kudos to you. Give yourself a pat on the back, clap, a hug, whatever you want to do. You guys are amazing for actually being on here. Second, Oran, Lewis, you guys are dope for exactly what you guys are doing, teaching the masses and making sure everyone is educated within the markets and gaining some knowledge. So with that being said, I do appreciate you guys allowing myself to also drop some knowledge and nuggets. So what questions do you guys initially have on the markets? Now, you guys could unmute your mics, or you could type in the chat above, or I'd say above because it's up here if you guys can see it. But what questions do you guys have? I'm a price action trader. I love to trade price action. I don't use any indicators for the most part. I love to use Fibonacci, trend lines, support resistance, supply and demand, have a general idea within the markets based off of what the market gives us. I love price action. So if anybody has any general questions, by all means, please feel free to ask. So what I'm going to do is I'm going to look here in the chat. Does not seem as if we have any type of questions right now. So that's perfect. Let me start introducing guys. Oh, we got a question? What's up?
Oh, no, I was going to ask you what your definition of price action is.
So price action is just, okay, so my true definition is, all right, so we have theories, right? We have Elliott wave theory, market maker theory, quarters theory. Those are all theories based off of one man's assumptions and his practice of trading. We trade, or for myself, I like to trade price action. So what does that necessarily mean? I'm looking for a specific action at a price level. So there's three things that I like to dictate to really place an initial entry. What is a candlestick, or what candlesticks are doing at a specific price range? Identify the initial trend. Obviously, we want to make sure we're going in the direction where money is pushing towards. We want to go where the money is at. So for instance, I always tell my affiliates, or anybody who has ever learned from myself, or anybody, because I always do sessions just like Oran and Lewis, always giving back. I'm always making sure that there is an understanding of where the market is going. So if it's going up, I want to identify a few things. So for me, I want to see action at specific price levels. What does that initially mean? So if I can see, and I'll break this down from the daily time frame, because obviously the higher time frame, the better. So we'll just get rid of everything. We can currently see what the market is doing. Action. Where's this market going? Bearish. Right? We can clearly see that this market is pushing down lower. That is that action that is taking. So what I also like to take account of, and I'm gonna write this down for you guys to take. This is for me personally. This is a preference. This is not, by doctrine from any professional, but this is what I like to use. One, and if I can't spell things, I apologize. I'm not great at spelling. I type very fast, so my typos may be very evident. So identify the trend based off higher time frames, right? So that's the first thing I always want to identify, based off the weekly, daily. That's exactly what I'm looking at. So what I can clearly see is that the market is pushing down. So when we're marking up when we're looking at the charts, we must identify exactly what's happening. So that's where step 2 comes into play. So we identify that we're in a bearish trend. Let's write that down. That's going to be point A. Right? So we see that we're bearish. So for the majority of the time, you would want to feel you want to feel comfortable when you place a trade. Would you buy in a selling market? Absolutely not. Would you sell in a buying market? Probably not. So we have to identify those specific things. So we identify the initial trend here, bearish. So what I'm looking at is to really find what the action is happening at specific prices. I like to use previous price, but we can actually use current. So for instance, the second step as well is this. Identify impulses or understand impulses and corrections. Individual and their corrections. So if I can see the initial impulse and its correction, it'll dictate a lot for me as a personal trader, right? So this is an impulse. This is a correction. The reason why this is considered an impulse is very obvious, right? Everything within the market is common sense. If you just put everything together. So we can see that this market is an impulsive move. Jay, how do you know that's an impulsive move? Good question. Let me answer that for you. You see how this right here ended up as a level of support? How do I know that's a level of support? Well, when we were crashing down, this market was pushing lower. For some reason, this market had a negative reaction at this price. We don't know why, but it had an action at a specific price level. So when I see something like that, I want to identify that for future or potential entries. So the markets are not always going to be to the pip or perfect, but we can identify a general zone, an idea, a reference. So if I see that the market has, in fact, respected this level and had a correction, but this is another impulse, it crashed way low or way lower. What happened? Now, again, not always perfect, but there's going to be an initial correction. There's going to be an initial idea. Again, we're on the daily time frame. So we have to identify what the market is doing in a longer term aspect, not just on the 15-minute or the 1 hour, because if you do that, you're not going to necessarily identify where the strongest area of structure is, or if that area of structure is going to hold. And we'll talk about that. So the reason why I'm identifying this is because I always want to see what the market does after. When we have a break of structure, you're never going to see just a small body candlestick like this. You're never going to see that. You're going to see what you will call a bearish or bullish engulfing candlestick, meaning a strong, concisive break. That is an action at a specific price level, right? Because for some reason, when we were here, the market decided to not break below until we actually came down. This is the action. This is telling us sellers are predominantly still in the market, and this is still having more action to the downside. So there's a thing called time frame correlation. Write this down. If I do not know how to spell correlation, so I'm going to do my best. Correlation. Perfect. I barely graduated high school, but I make 6 figures a year, so it doesn't matter. So my spelling doesn't dictate my trading. It's cool. So when I'm looking at the markets, I always want to identify what they are doing at specific places within the market. So what I'm going to do is I'm going to mark this up, and I want somebody to give me a random pair, and I'm going to give you more of a live idea, more of an actual right now, what I would necessarily look at and do for a specific market to identify exactly what I'm speaking of.
Someone said GU.
GU? All right, let's look at GBP USD. So I kind of already have this marked up, so you guys are good. So again, identify where market structure is, right? Identify where the market has had some type of action. So we know based off the higher time frame, we're on the daily time frame. If you guys don't know where that is, let me identify where that is right here. Daily time frame, where that little arrow is right there. 1 day, just in case anybody has that initial question. So we're on the daily. The higher the time frame, the stronger the confirmation. So let's replay this. And I know you guys were talking about it before. Also, Lewis, I really highly appreciate you showing me that F12 thing. That's dope. Like, I use the replay on TradingView, but I wish I knew this a lot sooner on NC4. So I just cut the market in half, right? We can tell that this is a level of support. How? Because for some reason, this bearish move, this impulsive move, well, this is like a few impulses and corrections within them all. But what we can identify is that this is actually the area of structure that was held. How can we determine that? Identify what the candlesticks, what the market is doing, the action that is taking place at these spots. Is that a level of rejection? Absolutely. How do you know? We have a bullish engulfing candlestick right at that level. This is actually, and don't get it actually, no, that would not be a morning star. Actually, it would, because it went above a little bit more than 40%. So what I would look at is this initial reaction here. What happened after? Even though we do have a small break here, it still came within that range. It still respected that range. And look at all these candlesticks there. Small-bodied candlesticks. Wicks. Let me do this as well. Wicks equal rejection. If I see wicks to the downside in a bearish market, that is a possible idea that the market is going to reverse or possibly have a correction. But you know what took that idea completely out of the way? This candlestick, right? The market has now showed us a bearish identification, a candlestick representing sellers within the market, and that more money is continuing with this initial trend. Again, first step. Identify where the market is going. What is the initial trend? This is bearish. You want the wind at your back, right? When we sail, or we're like pirates, right? My analogies are so off, but they work. If we are pirates, right, you don't want to be going against the wind with your sail. You want to feel comfortable and make it an easy ride and have the wind at your back. Why would you go against the initial current? You want to go with the current so that way you could feel more comfortable and identify that this is going to be a profitable trade. So when you're marking things up and you're identifying in the market, you have to identify where the market had some type of action, and you're only going to be able to find those actions at a specific price. Now, every time frame does have its own support and resistance levels and strong areas of structure. Your best bet, higher time frames. I'm always going to say that, because if I'm at a daily area of resistance, it's going to be a lot stronger than the hour area of resistance. So if I can see that as of now, and we will play this now to see what the market did, it continued to crash down lower, right? Based off of the idea that the market has shown us strength. Now, this initial impulsive move, this is where price action is now going to come into play. And this is beautiful for GBP USD as well. So price action, we are waiting for a specific action at price. So we labeled and identified this as our area of support. Let's label this support. Now, support is newfound resistance. What does that mean? So if this was support before and it broke down lower and we are back at this area, there's two things that we can initially say. Support is newfound resistance, and this is a retest. Try to get, come on, there. Oh, come on. Doesn't matter. All right, perfect. Retest. Money, I'm going to put a bunch of these, is made at the retest. This is where you get your confirmed idea, right? This here, the break of structure, is a signal. That is just a signal telling us that the market is going to most likely, again, when we trade, nothing is 110%. If that was the case, we'd all be rich. But what we can identify is a more probable area of structure or a probable area to enter a trade. So the market has found support. The support was broken and now acting as an area of resistance. So now I'm looking for a specific action at this price, because now it's resistance. I am not entering a trade unless I am at a specific area of structure or price, because you need to understand that we can identify these areas of structure off the higher time frame. A simple correction like this one, on a smaller time frame warrants tons of money, tons of pips. If you are able, step 2, to identify the impulse, find the area of structure where you're most likely going to find I would say stagnation, exhaustion, and find its correction based off the higher time frame. You can either, and I don't recommend this, your best bet is to always go with the initial trend, is you can either buy here, don't recommend it, but when you get back to this area that was broken, right? Again, we're coming back to this. Look left to get right. When we identify this initial area of broken structure, I'm looking to enter at the area of retest. This is the area of retest. Now, let's break this down a little bit further and identify how you would initially enter this market and what other things you could look for to possibly give you an idea. The reason why I don't use indicators is because they lag. They're period moving averages, or I do use moving averages, but stochastics, RSI, I don't necessarily use those or any type of indicator, because those are giving you previous price action and previous history within the market, such as if you have a 10-period moving average based on the daily time frame, that's giving you price action that happened already 10 days ago. I don't care about that. I want to know what's happening right now. Hence why we use candlesticks in the actual market structure to give us the biggest idea. So what I can currently see here on the daily, and it may, I do believe the dollar is going to strengthen, meaning that GBP USD may push down lower, but that's all subjective. What we can currently see here is now when we're at an area of structure, right? First step, identify the trend. Second step, mark everything up, really see the impulses and the corrections. Third step is to now identify any type of candlestick patterns or a specific breakout pattern or any type of advanced patterns that you like to use, i.e. harmonics, bullish or bearish flags, any type of formation that may give you an initial idea. Now, if I scale down to a lower time frame, I'm just going to put these arrows right there. We're going to be able to dissect this and see this a little bit more clearly. What does this initially look like? Does anyone know what I'm identifying with these two arrows? Very, very important at the specific area of structure and price that we're currently at. This is very important. This is called a double what? I know somebody know it. Let me see what we have
We
here.
got double top. We got double top.
Exactly. There we go. There we go. Everybody in the comment section getting it crazy. Teacup? No, I don't trade teacups. I trade teacups the correct way. The proper way of trading teacups is like, so this would be considered a teacup, right? So you can see it like this. And it comes up, you have your handle. The original idea for the teacup is for that handle to retrace and then actually push up higher, right? That is the initial idea for a teacup, right? That handle does happen, but the initial idea for a teacup is to push up higher. But whoever said, and I think it's like a bunch of you guys, is that this is in fact a double top. Now, what do we have here currently? We identify that the market price action is at an area of retest or previous area of broken structure. And it is asking itself, does it really want to break the spot? Does it want to push up higher or initially want to respect here? So let's put double top, right? So now we're looking at price action. What is it doing at a specific price? The action is double top. The price is the 1.30500 handle. A double top is a selling opportunity, a selling signal. If I'm at an area of retest, of broken structure, which is now acting as a form of resistance, I have this double top formation and obviously scale down to a lower time frame. When you're looking to enter a trade, you must use time frame correlation. Identify the trend on the daily, identify what you can on the daily, the support resistance areas, 4 hour, any type of advanced patterns, harmonics, Elliott wave, whatever it is that you like to utilize, use that. Smaller time frames, 1 hour, 15-minute. Look for exhaustion candlesticks at the area of structure. That is the action. All body candlesticks, wicks showing rejection, right? That wick, this wick cannot break above just yet. This is showing me that this specific level is holding. It is strong. So I don't necessarily enter until I see a potential candlestick reversal pattern. You guys can look that up at any time, but my favorites are either engulfings or evening or morning stars. Those are the best ones that I personally like to look for, because that's telling me that the probabilities of my trade just went from 50 maybe to 75, maybe to 80. So when I'm looking at this, also you could look at breakout patterns like this, which this would be a bullish breakout pattern, a bullish flag. So there's a lot of ways you could break down the market. And when you're looking at, I'd never use any type of patterns or anything on the smaller time frames, such as the hour or the 15-minute. I'm always on the 4 hour and the daily. So when I'm looking at a form of price action, again, I'm looking at what the market is doing at a specific price and how it is reacting off of that specific level. I think the biggest idea that I can give is a trade that I was in earlier, NZD USD, right? I was able to identify what the initial market was doing. Again, higher the time frame, know what the market is doing. Downtrend, bearish market. I do use a bunch of trend lines. I do use strong technical analysis, but I'm just breaking down the idea of price action. If you guys have any questions, by all means, put them in the chat and I will look at them and I will answer them. Absolutely. Rejection, candle, exhaustion, not extortion. I'm not trying to take your money. Not extortion, exhaustion, candlestick, exhaustion, just here in the chat group. All right. So I can see that the market is pushing down lower. Now the wind is at my back. I'm scaling down to the smaller time frames and I'm really looking at what the market is doing. So I look at every single aspect. If I am in a bearish market, there should not be a bullish move. That is a correction. If this is a bearish move, there's no reason for that to happen. If I'm in a bearish move, there's no reason for that to happen. Now look at what I just did. This is where we entered right here, right? Replay. Action at a specific price. Actually, let's delete everything. So I saw that the market was in fact pushing down lower. Bearish market, right? Now this was giving me the idea for a harmonic pattern, which did in fact happen. Now the harmonic pattern, I was not able to get into whatsoever, did not get to the initial buy. But what I was able to identify was this here. This was an area of support because there was just a small correction here. I personally, I love to look at those things because that's where you get those prime entries. And you can also use your Fibonacci retracement tools to give you more confidence. I'm scaling down to a smaller time frame, right? And now I want to see what the market is initially doing. Again, candlesticks. Where's the market going? Is that a bearish engulfing candlestick respecting this initial zone? Right now, I'm just going to bring this up so that way you see the actual zone. Again, it's never going to be to the pip. Never. We have to identify the initial price level. So it's kind of like taking stairs. Has anybody as a kid went up and down stairs like full sprint and lost your breath within like the third floor and you're just like, all right, I got to catch my breath and kind of get my breath
now?
Yeah, man, I'm sitting down and I'm out of breath. So you're good. Like, I get it. You know what I'm saying? So what we're doing is we have to identify those levels. We have to identify them as staircases. Picture it as staircases. As a little kid, we like to run. We like to have our energy. I don't know about you guys, but I'm getting kind of up there in age. I can't do that no more. So I'm going to go from let's say this is the 10th floor, and I got to go down to the 5th. I'm going to sprint down there. I'm out of breath. I need to take a break. I have to identify that the next time I take this next run, that I can make it down to the next floor. This is my breather. This is me taking a break. I'm going to take a break on the same floor. I'm not going to go anywhere. Obviously, I'm not moving. I'm tired. I want to feel comfortable. When I'm ready, I'm going to make that move. That's the retest. When you gain all your breath back and all the energy in order for you to make that next step and break in a convincing move and a convincing idea that you are definitely going to make it to the next level, that's the retest, right? So what you could initially do is identify these areas. I see that this is the last area of previous and strong and important structure utilizing price action. What do I mean by that? Good question. Let me answer that. Let's get rid of this really fast. All right, let's break this down. Now, this market, obviously, I did not want to cancel this candlestick that was here, but we can see that this was an initial support. Why? Because the market came down. We had a bullish move. If I was to measure, I wouldn't, probably not even the 23.6, almost the 23.6. Actually, it was a 23.6, perfect. Meaning that the next move, in case anyone has no idea what fibs are, I'm actually going to explain it as well as I do this. Every Fibonacci retracement ratio is, I wouldn't say dictative of the next move, but it gives you an idea of how impulsive the next move is going to be. Now, this is all preference because I'm speaking on Fibonacci's when we had the Fibonacci God on this initial call. Oran Wright is the Fibonacci guru on everything. So this is just the way that I personally like to use my fibs. But listen to Oran. He has more definitions and he's actually a lot more knowledgeable.
Oh, you got this, brother. You got it.
No, I'm being serious. I'm being dead serious. Like you're like, I want to know your fib stuff. What I like to do is I identify each one of these levels as potential ideas on how far or how fast and impulsive that next move is going to be. So I'm always utilizing Fibonacci's in order to place an initial trade. Fibonacci's for me is the secret or the price that we physically cannot see, and that even the market is not giving us, right? It's finding those secret price pockets for specific entries. The way that I like to use it is with previous price or an area of structure. That's what you call confluence trading. So let me get rid of this really quick, this initial area here. This is the area that I'm obviously looking at. Now, why? There's a few factors. Well, one, this initial candlestick broke below. This initial candlestick wicked and could not. That is showing respect. This is showing violation. So if I can see that initial idea, let's press play. Does this market do anything else? It does, in a sense. Not almost, but almost perfectly. This, if my tools work, gives me a general idea because it came right back into where? Look left to get right. Did it not just come back into this previous price? It absolutely did. Now, there's a lot of things that you can utilize and understand what to use in conjunction. So, again, step 2, identify the impulse, identify the correction, swing high. This would be the swing low. Right, yeah. So 61.8 Fibonacci retracement ratio. Now, there is no specific fib ratio that must be met. You just have to use your confluence and idea. If my Fibonacci, the 61.8, the golden ratio, is matched up, and again, not perfect, but a general zone, an idea of where the market is coming into. Sorry, my best friend just hit me up. If this initial market here has came back to retest this area where you have to short node, identify what the market is doing. These candlesticks don't look very impulsive anymore. They don't look very bullish. This is a strong bullish correction. It doesn't look too bullish anymore. Action at a specific price range. Does it look exhausted? Here on the 4-hour time frame, just a bit, right? A little bit. Wicks equal rejection. We have a wick, small body candlestick with wicks. Jump down to a smaller time frame. Identified. Is there anything that we can possibly see? Yeah, action. Bearish engulfing candlestick. Engulfing means, again, everything within trading is common sense. Just put the context or the words of the context of the words that we say in the phrases together. Trend line. That is giving a line dictating and directing us where the trend is initially going. Engulfing. It's like Pac-Man. It is eating this candlestick and this candlestick and this candlestick because it's bigger. When you see an engulfing candlestick, especially in the direction of the trend, that is showing you market sentiment, market direction. Layman's terms, motherfuckers are selling on some real, right? So we all get that. People are looking to sell the market. That is, again, where the wind is at your back. So I feel confident identifying the action at a specific price level. It is not a theory, right? This is by doctrine what 90% of professional traders are utilizing on a daily basis. We are identifying where the market is going to be stagnant, where the market is literally revealing itself and saying, you know what, this is probably the best time to get in because we're trying to just simply catch our breath before we make our next move. We don't know what initially is going to happen as retail traders, but as retail traders, we take an educated guess, an inference, put those probabilities together, right? Identify where the market is coming into. Identify what the market is doing at a specific price level. And obviously, you're not just going to buy and sell at a support and resistance zone. You want to identify everything put together, harmonics, Elliott wave, again, anything that you like to utilize. Now, I don't necessarily use indicators because that's my personal preference, but you can, in fact, use stochastics, RSI, something that will give you a dictative idea of where the market may go. Maybe it's oversold here or overbought here, right? If you could, actually, we'll put RSI together because we can't use that, right? So if you are overbought in a selling market at an area of previous structure, you can probably put that together and say, you know what? I know that the market right now has given me a bearish engulfing candlestick. I understand that right now in all time frames, I'm getting rejection. What equals rejection? Small body candlesticks, wicks of these candlesticks, candlestick patterns or reversal patterns, right? If I can identify those at a specific price level, this is what initially happens. Instead of having a 50 pip stop loss, your stop loss now is 15 to 20 pips. Right? Because now we identify what initially can happen. Identify where the market is. Let's say you sold here in a perfect world. Your stop loss is going to go right here. Why? Because we understand that, and we also have to let our trades have a little wiggle room and breathing room, that if this is broken to the upside, this is probably not going to stop. Right? So we don't want to have a stop loss all the way up here because that's probably going to be met. So we don't want to have 100 and something pip stop loss. Identify, again, levels. This was an area of support that was violated. I understand if this is violated, the market is going to use this next move or level as a gravitational force. Meaning, if look at the sun in the earth, right? We orbit around the sun, gravitational force. That is the same thing that the markets do. If we break an area of structure, such as here, let's actually make this line a little bit better. Look left to get right. Jumping up to the daily. Are we at an area of previous structure? Somewhat, nothing too crazy. I would not go that far back. But anytime I'm looking at this, I always want to match it with something. And again, higher time frame, the stronger the confirmation. This is the pattern that I was telling you about. Candlestick reversal patterns, action at specific price levels, breakup structure, came up to retest, obviously on the smaller time frames, and this is what you will call an evening star reversal, right? That is telling me continuation. That is telling me that the market is now going to continue to push down lower. These three candlesticks, this one, and this one, right? These three right here. Now, by the time an indicator tells me anything, the move's already down here. We already missed the initial move. But when we see this, again, in action at a specific price level, we can identify the next possible move with little to no drawdown. Now, your entries are all dictated on you as an individual. I will not tell you how to enter a trade. I will not dictate how you should be trading, because whatever works for you works. If it makes money, it makes sense. But for me, the 3 steps that I personally like to use is identify, obviously, the trend on the higher time frame, identify the trend on higher time frames, and your structure levels based on the daily and the 4-hour. The 1 hour, you don't necessarily want to use too much or any of that structure for the most part. You want to identify exhaustion on the 1 hour. You want to identify exhaustion on the 4-hour, small body candlesticks, wicks. You want to go with the initial trend. So if I'm looking at this as a level of support here on NZD/USD, and the market has crashed down and broke below that low, you can clearly see here, and the market just came back up to retest that level. It really did. And what happened? We came back crashing down lower. We're not crashing back down lower, but money is made at the retest. This retested. This is a bearish engulfing candlestick. Not too pretty of a one, but it is, because it engulfed more than this previous candlestick. Seller momentum, seller or market direction, and possible sentiment. Again, utilize your specific tools. I personally like Fibonacci's. Swing high, swing low. Where did we come up into? 23.6 again. Not perfect, but you want to utilize every aspect, a zone. Never get stuck to the pip. You're never, well, I wouldn't say never, but it's almost, I wouldn't say almost impossible either. It's difficult, I would say difficult, to try to get it to the pip with absolutely no drawdown. But if you can identify the specific area of structure, the price where you have previously seen action, it's probably going to have another action at that price. So anytime I'm looking at the markets, I want to see a specific action at price. Candlesticks is dictating, for me at least, where the market is most likely going to go, right? If I see something like this, I'm not going to go against that. Why would I look for a buy when it's clearly telling us don't buy, sell, right? So I don't want to keep you guys too long. I do see some questions here. So you just looking for big moves? I don't necessarily look for big moves. I do like to make sure that I understand the true market movement. So the higher the time frame, the stronger the confirmation. For instance, if I am on, let's say here, or I'll just go to GJ. Everybody's like favorite pair for the most part. So if I'm identifying the market, right? So on the daily 4-hour, doesn't necessarily, I mean, it does matter, but I can see that the market is pushing down lower. Me personally, I don't know about you guys, I got bills, right? So I need to be placing a few trades out of the week. I can't place like 4 or 5 trades. I got to place a few. So I want to understand that either I can utilize the idea that the market is going to continue to push down lower for the reason of finding re-entries, stack my trades, and make more money. That is a little bit more risky. So if you're new to the markets, please don't do that. But if you have some experience, absolutely. Buy and sell the dips if you can find them within the trend. But if I can see the market is moving down, why? And I can see that this is the impulse and this is the correction, and I know that this move, or I wouldn't say that I know this move is going to happen, but I have an idea. I'm not looking to buy anything in here. I want to hold this trade. I want to make sure that I'm going with the initial market movement. I want to catch as much money in pips as I possibly can. So if you're on the 1 hour, you probably get 20 to 30 pips. If I can utilize everything off the daily, that 20 to 30 pips is now 200 to 300 because I know the true market direction. On the 1 hour, you're not going to get a true market direction. You're going to get small moves. You're going to get maybe a profitable trade based off of that time frame, but it's not giving you the actual movement. we see all these things on the smaller time frame, but it doesn't give a strong confirmation up until you see a specific pattern or idea that can give you more confluence for a specific trade, i.e. harmonics. This is something I would look for, right? I would not look for a buy in a strong selling market unless I have a strong idea. This or a specific advanced pattern would give me that. But if I don't see any type of strong bullish opportunity in a bearish market, not looking to place that trade. I'm always utilizing the higher time frames to get the general idea of market movement. So let me go back here. Do you use line charts to identify zones? Works for me. You can, absolutely. You could definitely use your line chart to identify zones, right? This is what your line chart would initially look like. You can actually look for these. These are more pinpoint accurate, but sometimes they're not always met. Now I do have an initial strategy that I kind of came up with that's been killing it. And it'll look like this. And I can't teach this. This is like way too much right now, but it gives you a general idea. And I do use the line chart to find perfect entries, but that's dictative to the initial strategy. But I definitely use the line chart. The line chart is amazing. You'll be able to find strong pivot points, or I wouldn't say pivot points, but entry areas in your more sharper areas of entry. But the reason why I don't utilize the line chart too much is because I utilize the wicks of candlesticks. And the reason why is because you can never measure anything with fibs or any type of tool unless you utilize the wick, the full price move. If you're utilizing fibs, you're not just using the body to body, you have to utilize the wick as well. So I'm always seeing the candlesticks, and obviously because I like to use candlestick reversal patterns. But to identify zones, absolutely. I love to see zones within the line chart. But I usually use candlesticks because you can see the cluster of price. You can see whether or not it really had a hard time or struggle. And the reason why I like to see that hard time and struggle is because in previous price will always end up being relevant in the future, right? And I want to see those wicks. Again, wicks equal rejection. Small body candlesticks mean rejection and a possible bigger move about to happen. And I always like to use that on the daily, because if I see exhaustion candlesticks on the daily, that's going to give me an idea that, yeah, this market is probably going to have a longer move to the downside, and I feel more comfortable placing that initial trade. Want to add a thought on fibs when time allows? Yeah.
Louis,
what's up, bro?
Let me just unmute Louis real quick.
Absolutely.
There we go. All right, Louis, there you go.
Yeah. Excuse me. But you touched on a whole ton of stuff that I wanted to drop a couple of ideas on.
Absolutely.
But I'll just touch on the concept of the fibs. I'm going to share my screen for a minute.
Absolutely.
I developed a tool for using fibs. Hang on, share screen. And I'm doing a search. I cleaned out my computer and put everything on a flash drive. But I don't know if you can see this chart here.
Yeah, we can see it.
All right. So I developed a tool for using fibs to give me an idea where fibs are likely to go. And essentially, there's two sets of colors. So you see the magenta up here, and red and orange and green and blue. So what happens is, after a whole bunch of study and doing a lot of research, I found with a high sense of accuracy that if I can determine price bouncing off of 618, where is the highest probability that it will go in relation to other fibs? So if it bounces off the red, make a long story short, a better than 75% chance it will go to the other red marker on this tool. Do you follow me? And unfortunately, this is a picture and I can't adjust it. But if we could do this all over the place, you'll see that this is really, really accurate. It gives you a good idea as to where price is going to go. All right, because price tends to be, and again, I'm a price action trader also. I use the concept of price action a bit differently. But this is a real good way to look at this. And I was looking for the chart so I could share it so you can add these fibs on your own MT4 tool. And I was doing a search and trying to listen at the same time. But this is the general concept. So if price bounced off the orange, it's likely to go to the orange. If price bounced off the green, it's likely to go to the green level, and so on. And very similar to what you're saying, you know, we have a rejection setup here where we had price move up to a level and then it was followed by a bullish engulfing. That's an indication that this is the level that everything's going to collapse on. Okay, same thing here. Yeah, you see price came up and tagged this area, but then we had a bearish engulfing, I should have said. Bearish engulfing candle, so that's an idea that price is going to collapse. Same thing here. So that's a very similar concept. I'm still looking for the chart to show you how to add these to MT4. The other thing you mentioned too was with the indicators, and I will say something about indicators. 99% of the people teaching you how to use indicators don't teach them the right way. And you were on New Zealand dollar, I think it was. So, and I can't see the chat, but was that an RSI you added? How do I see the chat here? J Pips?
Yeah, I think let me see, he may have tuned. No, he's here. He is. Yeah, he said, yeah, it was the RSI.
Okay, so I'm just going to throw an RSI up here because these things that they teach them so wrong. And when they teach indicators as entries, they need to combine it with something involving price action is where you get the most bang for your buck. Oscillator. So relative strength index. And I'm going to leave it here at the standard markers for now. But you had a couple of very interesting, well, okay, you know, I don't use a 14, but I'm just going to use it here now just for sake of conversation. You see all these indecision candles here?
Yes, sir.
There are a couple of things that I look for, and there's one is indecision candles, but how I would use the RSI, and I don't use the 14 setting, but I'm going to leave it the way it is for the moment. A nice trick with RSI, some of these other indicators, is to draw a trend line across the peaks and wait for the break. And you get that break right here. And look at how the market followed that. Let me slide that over. All right. But very, very simple. We can go up here now and look at this collapse over here. If we were to draw a trend line, and again, this is just confirmation, not necessarily a trade entry. And then look at where it broke. So I'll drop a line here. Up. And what it does is it gives you excellent confirmation, not specifically an entry. Okay, by dropping the trend line on the RSI, because they teach the use of these indicators absolutely dead fucking wrong. And I'll give you another one, stochastics. They say, you know, the over, you know, when it's over this and under that. And I'm just going to draw a simple channel here, and I'll show you the correct way that stochastics should be used. You bring this down just a hair. So it's a combination of things. So he's looking at price action. Now, in order for this to work, you need your trend line across 2 points. You know, and J Pips, I think, will confirm that. You need your trend line to touch 2 points. So this would be the area of price where you'd want to see an action. It is also an area of prior support because you've got this whole thing going on here. You see that? But you've got this trend line too. So with stochastics, let me just throw them in here real quick. And I'm going to use the regular setup here for now. But here's the thing with stochastics. What I want to see at this point of battle is a stochastic cross short to complement the idea that this price action is taking that move. We have tagged our trend line, and stochastics gave us a short cross as confirmation, not the entry signal. Here, price came down and got close to our trend line. It made indecision candles. So when someone makes a decision, that's when you're going to see a killer move. I have a specific name for this type of candle. I won't get into that. But what I want to point out is that stochastics crossed up at the point of impact, at the line of battle, at the price. You follow what I'm saying?
Yes, sir.
These were our 2 prices here. So now this will be the third area where you'd start to look for that. And if you look, stochastics crossed up. Let me slide it over. It made this bullish engulfing after the crossover. That's what I'm trying to get to. You see the stochastics crossed here, and now we have this small engulfing candle.
Mm-hmm.
And now price, and you already know where price is likely to head because you got the trend line there.
Mm-hmm.
So you can just sit back and just wait for it to come back. And with the daily candle, as I mentioned, depending on your trading lifestyle, I could come back and just watch this bad boy head here. You know what I'm saying? Because I know it's got to hit this trend line at some point, hopefully. But then when it gets here, I'm looking for that cross. And now we already know where my next point of battle will be. Oh, I got to squeeze this in a little bit. Now I got to squeeze this down a little bit. My next point of battle will be down here somewhere. And you see stochastics is already just kind of laying in the woods waiting. So now this would be my next point of battle. And if I were to go out to a weekly time frame, we will, oh, what the hell was that? If we would go out to a weekly time frame, and I'm looking for another area of possible support or resistance, the closest thing I could find would be this area or this area. I'm just going to drop a line here. And again, the same kind of concept with the price action trading. I'm not going to draw a box. I'm going to go back to the daily. And let me see where that line fell. And look at that. Okay. So I just did it real quick. If I went down and really took my time, but I didn't want to take up too much time. So keep in mind, the indicators are great confirmation of a price action event. Okay. So, but learn what the indicator was designed for. Why did they make a stochastic? Stochastics were designed for ranging markets. And I'll just say that and then just get out of here real quick. But if you look at this range, stochastics were designed for ranging markets. And I'll put this ranging market here. Okay. And so what I want you to see is when we had this bounce, we tagged that line, we had a stochastic cross. So the stochastics is coming back up here. It tagged the top of that trend line and made a cross short. And now I've got this line here now. So I know, let me take that back. High probability stochastics will come back here. And look, it tagged the line and made a cross up. You got me? It never got up here, so I can ignore this one. Came back and tagged this again, made a cross up. And now I'm looking back up at this area again. So you see in a ranging market, now remember, a ranging market isn't always sideways. It can be a channel, but the tool comes into play the same way. So once you understand why things were designed, then you can use them as confirmation. So Mr. J, you know, that concept of looking for a certain thing to happen at a particular price level is something I do quite a bit. I tend to use indicators as confirmation.
Absolutely.
And trend lines and all that, because they work so beautifully.
It's beautiful, yes.
Yeah, in conjunction with each other. Like you started to draw a wedge before, and I'll give you an example of how, like, I would do something like that. So you see this, and you see that.
Yeah.
Okay. So now if I put, I'll put RSI up here for the moment. Indicators, oscillators, relative strength, and I need to put in a 50 level, and 50, and I'll get rid of the 30. Yeah, delete and delete. Okay, so now what I'm looking for when I have a wedge and I see a break of the wedge, I would like to see that relative strength index break the 50 line. Okay, and those are just incredibly powerful. And then if you want to do a price action projection, but just real quick, I would do, come on, take the back of the wedge.
Oh man, I knew you were gonna grab that.
Yeah, and go back up here. This would be
I knew it.
This would be my first projected profit target. Okay, the other thing too, and I'm going to cover these just real quick because there were things I wanted to point out. When you have a break of a price area that Jay Pips was talking about, one of the things you can look at is the basic price action in that area. So let's say you're looking for a break of this area right here, okay? And I'll put a trend line, a little line right there. So we had rejection here. So when you're looking for a break down here, if you get the break and it does eventually break here, well, gee, how far is it going to go? Well, then you look at price action. And my definition of price action, by the way, is the natural movement of the market comprised of 4 repeatable patterns. And I'll leave it at that until the next time we get together. But so you see here in this first wave down, we had that much. Now that we've cracked this level and we're on a second wave down, it should give us that much. Okay? And usually, as J. Pip said, it doesn't always go to the pip. I take a little bit off the top, little bit off the bottom, and that's my profit target right in there. You follow me on that?
Yes, sir.
Absolutely.
It's a constant, repeatable pattern. You can set your fucking watch by it. Does it every time, but you got to be patient. You got to wait for it to come to you. All right, so I'll give you back the floor, but I would like to share some.
Well, we're definitely going to set this up again because having two pioneers in the game right now. Guys, honestly. We started around 10 o'clock is now 12:20. A lot of you now, we started this webinar because, most of you didn't have a trading plan. You had no idea what you just get into the market and press that buy and sell button. Had no idea. Am I going for 10 pips, 50 pips, 20 pips? You had no idea what you were trading. We brought Mr. Lewis Cooper on to help you with that. And then you got some golden nuggets on top of that. J. Pips came in and just shared it with you. Oh, it's 120? Oh, snap, it's 120. Guys, I got 4 clocks here in my office. New York, London, the Asian session, the Australian session, and for some reason I'm just off right now. I'm looking at another time frame. But anyway, guys, you came in. Jay dropped some valuable nuggets, just showing you guys something powerful. Wow, it's 7:19 in Hawaii. That's dedication right there. Okay, that's dedication. And we're definitely going to do this again. Okay, we came on here for everyone that's on the Facebook Live. I'm not sure why you still stuck on Facebook Live. When we dropped the link right there inside the chat on Facebook Live, you could have had all of your questions answered right here. So, team, here's the thing. There's a lot of people out there that can trade, but most of them can't teach. And you got some who can teach and can't trade. But you just been introduced to 2 people who can do both. And they kept it simple. All right, they kept it simple. Jay showed you naked trading. Lou made you want to indicators again. Okay, he made you want to love indicators, made you use them the right way. And that's powerful right there. Because most people, me personally, I hated indicators. You know why? Because I didn't know how to use them. I didn't know how to use them. So I'm going to go ahead and unmute you all and just go ahead and thank everyone who came on here. Everybody's unmuted.
Thank you.
Thank you. Thank you.
Thank you. Thank you.
Thank you.
And you're welcome. You're welcome. You're welcome.
Thank you.
Just go ahead and you can stop sharing your screen. I just want to give everybody a chance to show your cameras, show your pictures, show the beautiful faces.
Thank you.
All right. And you guys, we do this at the end of every webinar. Hey, Evelyn, what's going on? Guys, we do this at the end of every webinar. Show those cameras on there. Show those faces. Just make sure it's getting dressed for work. Sure you got your clothes on. Remember that one webinar we did at 3 o'clock in the morning? Somebody was getting dressed and working. Everything.
They get traded.
Well, thank you guys for the opportunity to come and share. And
Thank you.
Hola, Evelyn.
Yeah.
we'll get a chance to work. Maybe we'll try to get them to start writing their own trading book. I think that would be a good idea with this group.
Ooh, you guys hear that? Hold on, repeat that one more time, please.
Yeah, maybe we'll get everyone to start writing their own trading book.
Mm.
And I'll give you just a quick idea. Like when I was teaching in the city, all my students had to write their own book.
Mm.
Because if I gave them a book, they wouldn't read it. So they actually had to write their own book and learn how to copy and paste and do all that stuff. But I'll just show you an idea. One of my students worked with, this is when I was teaching channels. Oh, wait, can you see that?
Nope.
And to give you 5 to 8 triangles. All right. And there's 1, 2, 3, 4, and then 1, 2, 3 in here, but I won't get into all of that. But then he did all this, with my guidance, but he had to put his own book together. And then we looked at, how do you find the first triangular movement where you need 2 bottoms and you have to have that top, and then you draw your line out.
Hold on, Lewis. Hold on, Lewis.
Oh, I'm sorry.
Hold on. Oh my goodness, Lewis. That's too much information right now. I can't allow you to show that because those triangles are powerful.
Oh, yeah.
Next one, Lou, please.
Okay, yeah, I will. But then we eventually, so now that he knew how to find triangles, well, how do you trade them? Simplest way for a novice is to use trend lines in the channel, because you know where your targets are. I mean, you know where the actions are going to start. It's going to start here and go up there. You get the trend line break, and it would be good for scalping. And then you can always add more to it. And then, you remember I said all trades have 3 entries: your conservative entry, your aggressive entry, and your traditional entry. Oh, these long and short. Okay, I just wanted to see I haven't looked at this in a while. But as I'm hearing the talking, it's bringing back memories of stuff. And here's that, price action area he was talking about. And again, there are trend lines across the channel. But anyway, so yeah, well, maybe we'll get guys to start like writing their own lessons. I'm just dropping through some of these lessons here.
We definitely gonna
identifying major reversal points. All right, so this is just kind of what Jay was talking about. And these are psychological points: the 00, 200, 300, 400, and you mark them out, and you can see how they kind of respect those numbers also. But okay, it's late, and Oran knows that I will literally sit here till 5 o'clock in the morning.
Lewis, let me tell you, let me tell you something real quick. And Jay, you know this also. If a trader tells you, "Hey, just give me 15 minutes, I want to share something with you."
That's like talking to the senior deacon in the church.
Jay, you know this also, man. Just give me 15 minutes.
Oh, yeah.
Jay, give me 15 minutes, and I'm gonna be off. Guys, as a trader, there's no such thing as give me just a few more minutes. It's so much knowledge in our heads. I have a webinar that's been recorded 4 hours straight with Lewis. 4 hours straight, and I had to say, "Hey, Lewis,
I know,
work, man." I said, "You guys don't believe me. Let me show you something. You guys don't believe me. Like, oh man, you lucky. I can't. Let me go here. I'm gonna show you something. A lot of you don't believe that this stuff that we share is real." Watch, I'm gonna go here to Facebook, and I'm gonna go to our, Lewis, remember our old group that we had, the Financially Fit group?
Oh yeah, yeah.
That's the group that has all of our old school videos that we've recorded together on webinars.
I gotta go search there, yeah.
No, it's, oh man, 4 hours worth. So as we hear in the group, and I haven't been to this page in almost a year, but I was looking through it the other day, and I said, "Oh wow, let's go to videos." And all of the indicators that you posted in there, the automatic indicators, when you place a trade, it automatically placed your take profit and stop loss?
Yeah, yeah. Oh boy. Yeah, you bring back
Okay,
memories.
look
Yeah.
at these videos, team. These are all the webinars. Look at this. Here's one. Look at this.
Yeah, with the
This is the one you
spreadsheet.
did with us, Louis. 3 hours.
Well, I want to make sure they got it, and you know, it's okay.
Look at this one. An hour, 2.5 hours. We had one that I think was like 4 hours in here also. These are all the webinars that we did together, and this was the one with the trading plan. And you did this back on, yeah, 2 years ago. 2 years ago.
Mm.
So I want to just to show you guys, like, come on, guys, team. Whew, man, yeah, Charmaine. Yeah, if you want to go in there, Charmaine, I think I added you in there, Charmaine. Go in, you can check it out. I haven't been in that group in a long time, you know, but it's a lot of information in there. I think you guys will love. It's old school trading, old school trading, but it was definitely worth it. So thank you all for tuning in. God bless you. Have a good night.
All right, Oran. We'll talk during the week. Be well,
Yes, sir.
everybody.